Bosh, how's it going, everybody? My name's TradeX, this is my trading den, and today we're going to be talking about a schematic, a process which I utilize before I frame any trade. So before I press buy or sell, there is a process that I go through before I do that. This episode is going to keep you out of so many bad trades, it's going to improve your trading tenfold, and it's going to give you a framework to put in place before you start executing on your trades. So this is from a live session which I did inside Red Pill Trading. So I hope you find it useful. If you do, please consider smashing the old like and subscribe. And if you have any comments or questions, feel free to drop them in the notes below or in the show notes below or the comments below. Not the show notes. I put things in the show notes. You put things in the comments. That's how it works. And and then we'll go from there. But until next time, guys, trade safe, trade smart. I'll see you on the next episode. Abo. I think it's super important. You know, because I saw a message, I think it was AP. Let's continue the AP train of picking on AP. I think I saw AP yesterday saying, you know, there's so much information in terms of, you know, what it is and how I specifically trade. And the idea is not to trade exactly like me. Obviously, the idea is that you all become your own trader and you figure out your own little nuances that work for you, right? But what I want you guys to understand is, and let me share exactly how I approach trading. And then you can take that however you will. But if you guys want to understand how I trade, this is how I do it. Okay, and it's piecing it all together because I get it. We've got market structure, we've got lipstick in terms of ICT concepts laid on top, we've got our standard deviation projections, all of that, and it can get a little bit confusing. We've got models, all sorts. So I want to talk about exactly how it is that I bring that and piece that all together so you guys don't get confused with what it is that we're learning, right? So how most people start trading, I'm going to go over here, is they go. And I've seen a few comments, and I can see where you guys are falling short, right? They'll either start and go, macros. What are the macros? What's my entry? Right? That's like someone who's learning. They might have a brief understanding of what price is doing. They throw it all together. Macros. What am I looking at? Time. I look for my entry. Boom. I want to piece together a schematic of exactly how I trade and how I start, because the most fundamental part of trading that everybody overlooks that I see, and how I start every single trading day and before I take any single trade, is with context, right? Context starts everything. Okay, so what is context? And I'll bring it over here. Context is things like news. And when I say news, it's literally this calendar, that calendar, and that calendar alone. Okay, so I'm looking at when are those news events, what time are they high impact news events or not? That is it. Okay, because that allows me to decide how price is going to lead up into that news event and how it's going to interact afterwards, right? So context. Higher time frame position. So where we sit on the higher time frame, whether that's the monthly, weekly, daily, or hourly. Where do we currently sit if I'm about to take a trade on the higher time frame? Super important because that's where the institutions are placing their money, and it's where the major pools of liquidity are, right? And so you need to know where you sit on the higher time frame, context, right? And then the lower time frame price action leading up into that moment in time. So before I take any trade, that is what I start with, context. I do not start with market structure. I do not start with macros. I do not start with an entry technique. I'm always starting with context, and I'll break down an example in a minute. Right, exactly the same principle yesterday at 2 p.m. when I think it was yourself, Sandemi, saying, is this a 2 p.m. reversal? Well, if you had started with context, you would have known that that 2 p.m. reversal was invalid. And it's invalid because of context. It's not invalid because of the conditions that price was presenting at that time, because the conditions presented a valid 2 p.m. reversal. But what you are forgetting is context. You have to start here. And I'll break down that 2 p.m. trade in a minute. Okay, so before you go into any trade, you guys need to focus on context first. Because without context, you don't know whether you're in search and destroy profile, you don't know whether price is in a buy program, you don't know what liquidity it's running for, you don't know anything. You're just purely guessing based on either it being on a macro or some market structure principle that you've conjured up in your head, right? So the first principle is always context. After context, it's models. Okay, so inside of the Red Pill Uni, you have all of my models. Pretty much all of my models, right? They're inside of my own trading plan. So if you want to know how I trade in terms of schematics, they are all inside of that the volume 1 and volume 2. I'm going to reorganize it because you've actually got entry techniques inside models inside. So it's a little bit confusing. But the models are opening range breakouts, which we traded yesterday. 2 p.m. reversal, which Sandemi mentioned yesterday, although the conditions were right, the context wasn't. London close reversal. 2022 if is actually an entry technique, it's not a model. Asia to London session Judas swing, and there's a few others, right? So these are the models. These are the schematics that I'm looking at. That comes next. And I'll break this down in a moment. So what is price presenting at that time? Okay, so when I took my trade this morning for the guys who were on during London, I traded a Judas swing, getting in sync with the Judas swing to take out the Asia high. That was an Asia to London session Judas swing. It was a model, but before that was context, expecting the high to get ranked. We're in such deep discount. But we'll go through the examples in a minute. After schematics, if I'm trying to get in sync with my model, I'm then looking at a macro to get in sync with it in an ideal scenario, right? So whether that's the 950, whether it's a 1010, whether it's off the open, whether it's 830, whether it's 1215 lunch macro, whether it's 1250, whether it's 1 o'clock, 1:30, whether it's 250, 315, 350, any of those macros, that is where I'm looking to engage with price, ideally, okay, around a macro. So time, everyone says time becomes before price. True in the sense of before your entry, but macros come after context, after models, then you get your time. Then you get your entry, right? This is how I trade. Okay, so then it's the macros. After macros, that you've then got your entries. So whether you're a 2022 model type person, whether you're my 5-minute continuation model, whether you're 2022 if variation, whether you're hyper aggressive, going off a standard div target, whatever your entry techniques, whether it's return to a 5-minute discount after you're seeing 1 minute premium, doing the old flipper flopper, right? It's then coming down to entry, right? Then after that, you've got targets, okay? So that is the schematic that follows how I take a trade. Now, what sits underneath this, under models and under entry, is market structure. Okay, so everything that you guys have been learning in terms of protected lows, protected highs, how to manage standard deviations, all that comes under market structure. Okay, so if I see a model that I want to get in sync with. So today, for example, we had a Asia to London session Judas. Okay, waiting for price to come down into a fractal unmitigated range. Okay, this is where I went long. Okay, looking to run into the MWOG, right? So it was out of this low and I was traded it here to get up into this MWOG, okay, to take out the Asia high, all right, in a Asia to London session Judas swing. So this is me getting in sync with that schematic, but using market structure to get in my entry. So it sits underneath the schematic, right? It sits underneath the model. Okay? So I think it's really important to understand that. Okay, so for me today, when I was trading this, what do you think I was looking at as a potential for? Right. So a New York AM session reversal, right? New York AM session reversal. Okay? Looking to come back down into 50% of the range. What do we have at 50% of the range? 3 times standard deviation. What's that in confluence with this fair value gap? What's that in confluence with low of this new weekly opening gap? What's that in confluence with? All the liquidity that is sat under here because we had a broadening formation, right? So everyone who was doing breakout trading, right? Everyone who's doing a breakout trading, that's not the right. It was here, right? Everyone who's going breakout trading, all the liquidity is under here. So everyone's gone, every neophyte has gone boom, 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 we're going long. Fuck no, it's not, right? Bosh, bang. Okay, so let's start with breaking down the trade in terms of how I looked at this. Okay, how did I look at this? Well, again, this comes down to fundamentally understanding how price moves and having a lot of time in front of charts to know what price is doing at any given time, right? But this price action here, all of this here, is an accumulation of short positions. Okay, so every time it's stair-stepped up like this, this is essentially the same as you get on a 3 drives. It's very, very similar. It's not a 3 drives, but it's similar. All of this is just a moving price higher, inducing people into thinking the market's going to rebound. But everything that's going on in here is just accumulation of short positions, right? And it culminates in an order block at the high, right? So all of this is shorts being built. So this very low is a low of essentially a bulk of accumulation of short positions. Context, right? So higher time frame position. Okay, higher time frame position. Understanding what is gone on here, that we had this gap, not expecting the gap to fill because we had all of these accumulation of shorts, right? Anticipating lower prices. Context. Then, and previous price action, right? Then after that, do we have any news at 8:30 that got us up there for manipulation? Yes, well, we had news at 8:30. This is all manipulation. This is breakout traders anticipating the price is going to rebound, accumulation of short, long positions. This is all just mass fucking liquidity, right? Context. So then we can go after context. We can then move into models. Okay, so what do we actually have that is being presented here? Well, we have a New York AM session reversal, right? What is a New York AM session reversal? Well, we have the Asia high here. We have the London range, price returns into the London range, actually double bottomed on the hourly, but usually you'd get it putting into OTE. And then you have moving higher. What did this not do in London? This didn't hit or fulfill the higher time frame PD array, right? So what happens on New York AM session reversal? It runs the higher time frame PD array at the New York AM session between 8:30 and 9:30 is where I'm looking for a New York AM session reversal to take place, right? And then you're targeting 50% of the range. Right? It's a schematic. So after the schematic, then we have macros. Well, what's the macros? 9:30. What's my entry? 6.5 times standard deviation off the swing low. What are we anticipating at 6.5 times standard deviation off the swing low? Someone help me out. Higher time frame retracement or reversal. Okay? So does all of this has now framed a trade. It's framed a bloody trade, right? We can also look at market structure in terms of what's gone on here, right? If you're looking at everything that's happened here, right? So we have all of this accumulation inside of a 1 minute premium, right? All of these are weak lows, weak lows. I didn't like this running down, but ultimately this was the liquidity I was targeting, right? This is the liquidity I was searching for. So falling into market structure. Does it make sense? It's not just a case of what macro are we at? Let's look for manipulation and then let's look for distribution. It's not that. It's not that. So let's look at an example at 2 o'clock yesterday. So 2 o'clock yesterday, which was this accumulation of shorts. I think it was raised by Sandemi. I might be wrong, but I'm pretty sure it was Sandemi. I'm not having a dig at you, Sandemi, but you might think I am, but I'm not. I genuinely want you to do well. From the bottom of my heart, I genuinely want you to do well, right? But you mentioned, and this is what I mean by just slow down, just slow down, right? I will teach you, and I will teach you how to become a good trader. Just slow down, all right? So you mentioned 2 p.m. reversal, which is valid. It's a valid, everything in here is valid for a 2 p.m. reversal in terms of the conditions of price action, right? Everything. Why did I stay out of it yesterday? What were my reasons? Okay, context kept me out of that trade. Okay, so again, this is where the neophyte just focuses on this, right? They focus on this or they focus on this. It's wrong. It's utterly wrong. You cannot take a trade without that first. You cannot do it. So the context yesterday was at 4:45, we had Jerome Powell speaking. If Jerome Powell's speaking at 4:45, it's more likely you're going to get accumulation ahead of that, as the institutions don't want to place orders because he might like drop a shit on stage, right? It's more likely that he's not going. It's going to accumulate. We were also, if you remember, at this lower time frame low. We were consolidating. I said we're more likely to consolidate at this low, and we were also at the daily low. So I know, just out of experience, that around these lows, especially if you have potential for continuation, what was the continuation? I might add. Well, we closed below 2.5 on the hourly, right? So if we close below 2.5 on the hourly here, what's the target? Hello. 4 times standard deviation, right? So I had no interest to want to drive this back up here because it's more likely we're going to go down here. So people who don't frame context will be getting, because all yesterday PM session, they're going, well, why the f it's not bouncing? This is a classic 2 PM reversal. X, you'll know what you're talking about. But the reality is you haven't done the first step. The first step's context. If you don't have context, you don't know whether you're in search and destroy, whether you're in a buy program, or whether you're in a sell program. How the f do you take a trade if you don't know that? It's ridiculous. So you have to know the context that you're in before you look at schematics, before you look at macros, before you look at your entry, before you even consider anything in terms of framing a trade and an entry, right? So Sandemi, yes, you are absolutely right. In terms of the schematics, this was beautiful for a 2 p.m. reversal. And if this was in a different context, then this would have been a valid trade to take it back up to 2.5, right? Absolutely. 100%. Okay? If you want to learn how I specifically trade, and you're getting confused or you don't know how to piece it all together, then this, I'm being completely and utterly transparent with you. This is how I trade. Right? And as a visual schematic in terms of how I do it. And the first thing that always comes first is context. If there is no, if you do, and the context leads everything else. If context is fine, then you can lead to this, then you can look for your time, then you can look for your entry. It's certainly not macros, then models, then entry or anything like that. This is your trade. This is your route to a trade. Does that make sense? Has anyone got any questions? Okay, so did we top tick today or did we top tick today? I'm pretty sure we top tick today. And every single one of you can do that without question. Can do that. Absolutely. It's just a case of studying what is relevant. Everything else that is out on Twitter, I'm telling you, you do not need it. And the majority of it is absolute BS. So just park it outside. Just park it. Because everything you need, I guarantee you, is inside of Red Pill Uni and those private YouTube channels. And if you stick around, this is how I normally teach. I teach live off the cuff. It's my favorite style of teaching. You will learn over time. But I'm not gonna sit here and be that type of trader where, where's price going now? Where's price going now? Where's it going here? Where's it going now? Well, la. Because that just gives me anxiety. I don't want your anxiety. I just want you to chill the f out, learn how to trade, and execute. Okay? And it's, honestly, trading is so simple. It's so simple. But as soon as you start to overcomplicate it, you go into this spiral of like doubting yourself, looking for something new. What else is out there? What else is, who's the big dick out there who's got a new thing to present? Right? And then you just completely repeat the cycle. Right? Just dial in, focus, learn this stuff and you'll get it. All right? So, to answer your questions, if you had any in terms of where's price going next, this is where once price has done what I want it to do, so what is a New York AM session reversal? Well, a New York AM session reversal is what? Who can tell me what you're looking for in a New York AM session reversal if the low of Asia has already been taken? Well, London's being tagged, isn't it? So what would we be looking at? What would you be doing? Taking this trade, in an ideal scenario, what would you be looking at? Like, what do you do? What is the ultimate goal? If Asia low has been tagged already during a New York AM session reversal, what would you be doing? Looking for 50% of the range, right? So prices, 50% of the range was that level. That was at 89 I was talking about. So where we are right now, you'd either want to be in runners, right? Still holding a position from the high and holding runners to see if it wants to go and run the low and carve. And if you're not in runners, you stay on the sidelines. You just don't do anything. You miss the trade. The schematic is delivered. The price is delivered to the schematic. The model has concluded. Right? So there's no point sat here going, okay, now what do I do? Do I do this? Do I wait for it to come down here? Do I trade that? Do I look for this? No. Why are you making trading so stressful? Like, this is what I say. We can trade every goddamn swing, and trust me, we've done it. And we can do it. The question you ask yourself is, should I? Is it high probability? Do I need to? And the answer the majority of the time is no. This was the trade. If you miss this trade, you move to the sidelines and you wait for the next setup. Wait for the next setup. So, hey, guess what? If price decides to absolutely carve, what could we do? What could we do if price got down here? With no major retracements. What could we look here? What could we look for here? No, that's not 2 p.m, is it? Right, London close. You could look for a London close reversal. But again, what comes first before a London close reversal? What should you do before you even consider taking a London close reversal? Context. So what's the context? News. Do we have any news? No. Are we in a high? Would we be in a higher time frame level? Are we at a PD array where we're anticipating price to respect? Do we get down into this volume band? Is there anything? I haven't analysed anything down here, but you know what I mean? Do we have a higher time frame institutional reference point where we're expecting price to bounce? Whether that's a standard deviation target, i.e. 6.5 off this low, whatever it is. Is it 5? Is it 5 off the? Is it 5 off the hourly? Whatever it is. Are we at a level around that time? What is the PA leading into, the lower time frame PA leading into 11:30? Do we have a load of highs that have just been built up to allow for a London close reversal? Because what is a London close reversal? A London close reversal is a sweep on New York AM session liquidity. So if New York AM session liquidity has already been ran before 11:30, context invalidates the London close reversal because it's already taken place. Context. There is no London close reversal because it's already taken place. Right? You have to have the context to take trade. Okay, so if we get down to a London close reversal and price boom, 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 does all this, what can we look at here? If we're anticipating lower prices, what could we be looking for? If we got to this time. Breaker, 50% of the range. Combine it with sweep of lunchtime liquidity for continuation. Right? Models, but what's the context? Do we have a high time frame context from there? Do we have an entry model? Yes, a sweep of lunch liquidity looking for a further rundown on a sell day. Right? Macro, 130. Do we have an entry? Do we have a breaker block? Do we have a 2022? Right, all of these. Oh, have we hit a standard deviation? Have we come back to 3 times standard deviation for a continuation? Right, context, schematics, macros, entry. Everyone gets confused and says, time before price. Time before price. If you don't know that it's time before price, you're stupid. Right? It's true that time comes before price, but trust me, there's so much more that goes before time. What is price doing? Is there a schematic and a model? Where is price reaching for context? What's the higher time frame picture? What is leading to you taking a trade at that macro? Not just it's a macro. All right. So now we've taken this New York AM session reversal. We've come down to 50% of the range. We're actually hovering at the lows. I'm just complete and utterly neutral. Right? Completely neutral. To be fair, you could say not wanting to get back above the midnight open price for a heavy sell day. You could say that. No, this is context. Context. What's the weekly profile? Looking for a Thursday sell-off. Thursday little retracement for a Thursday continuation. Right? Price struggling to get back above the Thursday midnight open price, and now we're going to have a heavy sell day. You could frame this as an entry to go short, stop above the high. Right? Context. Model. Macro. What's the macro? 10-10. Manipulation at 10-10, looking to drive out the lows. Entry. Boom. There's a trade. There's a trade model. Right? So there you have it, guys. I hope you found that useful. In the show notes below, I'll put volume 1, which are those models for you. And I'll also put a link to Red Pill Trading. So if you want to trade live with me every single day, where I trade from pretty much London open all the way through to New York close, you can do. But if you don't worry. You have everything you need to become successful inside this YouTube channel. So guys, until next time, trade safe, trade smart. And I'll see you on the next episode. Abosh!